The flag pattern is one of the most common patterns that indicate the trend continuation. This formation represents a short consolidation of price movements within a sharp growth or fall in price. The flag is considered of support line and resistance line, which may be parallel to each other or overlap, which makes them look like flags. Movement within the flag formation we can mark with waves. Mainly this movement consists of 5 waves: A, B, C, D, and E, after which every following wave breaks through the line of resistance or support and continues the original trend. In any case, the occurrence of 4 points is necessary. Two of them are lines of resistance and the other two form the support line. Flags may be inclined in the direction of the trend, in the opposite direction of the main trend, or simple may be flat. The previous sharp trend forms a flagpole. If the original trend is moving upwards, this formation is called a bullish flag. On the contrary, if the initial trend is moving downwards, such formation is called a bearish flag. In this pattern, we can see great similarity with rectangles and triangles patterns. The difference is that the flags mostly occur in a sharp trend, for example, in time of publications of some fundamental news, which cause a large drop or growth in price. Usually after such a jump, a short consolidation is coming up. This consolidation is caused by closing position by some number of traders. The consolidation is generally short and the price continues to move in the original direction. When we talk about the bullish flag, the entry into the position is made after break through the top line of the pattern. Pending order should be set up several pips above the top line of the patterns because false breakthroughs often happens. That level on the picture is this black horizontal line. Stop loss is placed below the bottom line of the pattern or the lowest point, in this case the point E. Our target is the expected height of the pattern or the flagpole, which is indicated by a red vertical line. Let's move on the platform. We'll open currency pair Euro British Pound. If we look at a drop from October the 13th till November the 4th, we can see that the whole wave is made of flags. From the highest peak until the first significant bottom, which is October the 19th, we have the body of the flag. Then we have the consolidation, which represents the flag. We'll draw a pattern by connecting the upper point patterns. And now we have a line of resistance. And then connect the bottom points of the pattern and we have the support line. Support line consists of 3 points, first, second, and third. The fourth time support line is broken, and in this situation we had signal for sell. After this breakthrough, price has made a huge drop, then that is approximately the height of the flagpole. Then after this fall, followed consolidation has formed another flag. There is also a line of support which is formed by 3 points, 1, 2, and third. The line is broken for the fourth time, and the price again had a great fall. With flags we completed the basic patterns of technical analysis. Almost every day one of the mentioned patterns of technical analysis can be found on the platform. For this reason we will repeat the basic rules that apply to almost all patterns. The first thing that is necessary is to find out in which trend the pattern is and whether it is a pattern that indicates a reversal or continuation of the trend. The second rule, which is very important, is to wait for the pattern to be completely formed, which means that we should not rush getting into position, but should wait for the break through the line of support or resistance, and then make entry into the position. Thirdly, what is important is to respect the rules of stop loss and take profit. Just to mention that trading with these patterns is very gratefully for keeping trading statistics. We keep statistics by creating a table in which we import information about the pattern we have traded, which currency pair, amount of risk, risk-reward ratio, the percentage of success, etc. After a specific period of time, you should have a clear picture of how often certain patterns appears on the graph and what's the balance of trading with these patterns. In this way, you can choose the patterns that work best for you and which give you the best result. And after that, you can create your own trading strategy.